And it seems as though we are having a better earnings season than we thought. Is it too early to say that we will have earnings growth this time around?
Dom, you're right. I think that that's actually pretty standard. That's a standard playbook, which is to go in with lower expectations and set up for a whole bunch of beats. But if you actually look at the kind of degree to which they're beating and missing, it's about the same historically. So you could argue that expectations were reasonable. However, the actual numbers are slowing. We knew that that was going to happen, but we're getting a lot more cautious read. And if those cautious reads start getting taken into Q3 earnings and Q4 earnings, we're going to have to actually see a decline in estimates there, which means that the second half won't be as will be worse than expected. So
Gina, as we talk about, I mean, this is still the early part of it. We're not yet at the halfway point for earnings season. Are there particular points of positivity that you are actually seeing right now? And if so, is it specific to any one or two industry groups in particular?
Well, I mean, the strange thing is, we're looking at a 25 basis point cut that's been priced into the market and largely expected, and Powell hasn't done anything to change that expectation. So I would say that that's probably going to happen, and I think the biggest beneficiary is going to be the financials. And we are seeing some momentum in terms of earnings in the financials because it's steepening the yield curve. And the reason it's steepening the yield curve is that even though earnings are slowing, they're not that bad, Dom. We're not going into a recession in the second half. So the fact that the Fed is cutting rates seems a bit counterintuitive. So you see the long end of the curve is basically pricing in potential inflation. And we're actually hearing stories that that's true. Kat just talked about rising labor costs. The consumer space is talking about being pressured by rising labor costs and rising wage costs, right? That's inflation. You're also seeing rising commodity prices as well. So that's keeping the long end up. And of course, the Fed is cutting the short end. So that's great for banks. That steep yield curve, really, we haven't seen that in a while. Banks will benefit from that. And they're probably the only ones that are going to really benefit from that.
So Gina, is it fair to say at this point, with markets now at record highs, because we can say that about the S&P, we can say that about the NASDAQ composite, is it fair to say that stocks are priced almost for perfection at this point, given the trade outlook, given the earnings outlook, given central bank intervention more down the line, or at least what's anticipated? Are stocks now maybe a hold, or are they still a buy?
I think stocks are a hold. Broadly, that is correct. When you dig into the markets, there are definitely some sectors that have maybe a little more negative pessimism priced in because of the trade war, which has been the one thing that has held down valuations. So we saw a big pop yesterday in the semis because, you saw a few earnings beats and everybody said, great, this is fantastic for the semis, right? That was Texas Instruments and Teradyne. But, generally speaking, I think that the valuations in the stock market across the board are too high for what we are going to see in terms of just normal cyclical slowdown. We're not even talking recession. That's not even priced in yet, and that tells me that this is going to have to moderate. I wouldn't be buying stocks right now.